Hello, everybody. Welcome to Dr. Simplicity. Welcome to our third video of this series. If you haven't seen the other two videos, I encourage you to have a look at them. What are we about? Well, I am on a mission, and the purpose of my mission is to find out if futures and forex trading is profitable over time. If a structured approach is applied repeatedly and consistently. I intend to document a number of trades over the next 12 months using a dummy account. So what we will be using is a dummy account. I will also like to know the following. Is it really possible to trade in my spare time? What sort of return on investment is possible? Does it compare with traditional investments? Do I have to be glued to my computer in order to trade successfully? Can I replace my day job income by trading? Must I trade every day in order to be successful? Must I trade several instruments in order to be successful? Do I have to learn to use all sorts of charting indicators? And for each trade, I will show you the trade setup in real time before the orders are triggered. And secondly, the final outcome of the trade. For each trade setup, there can only be one of three outcomes. One, either the orders are triggered and trade is stopped out for a loss. Secondly, orders are triggered and trade closes for a profit. And thirdly, orders are not triggered by the good till date period and deleted. In other words, we will leave the orders on for a specific number of days, after which we will delete if the orders are not triggered. The trade strategy I will be documenting is based around trade of the non-farm employment change news released by the US every month, usually on the first or second Friday of each month. So hopefully I will have a trade to execute every month. If you like the sound of it, spread the news, come and follow me on the journey, and don't forget to click on the like button and subscribe for updates. Okay, let's spend a moment to read the disclaimer. So right at the bottom, the very last sentence there, it says clearly that all persons who choose to acquire or use any of Dr. Simplicity trading book, manual, or videos do so at their own risk. They are encouraged to discuss with an appropriate licensed financial market advisor regarding the suitability of trading or of any particular trading strategy. Secondly, there's a must-read section here. And again, the last paragraph is explaining that Dr. Simplicity Trading does not claim to be a financial expert, not claim to be an expert in futures or forex trading. This presentation is published as a personal exercise and should not be relied upon for purposes of trading the markets. Now, back to our second trade setup in this third video. And if I could take this off for the moment. Right, so that's a trade setup. But before we do that, we want to show you the spreadsheet. If I can get out of here, the spreadsheet outcome so far. So far, we've had a trade in the month of May. We had a trade, the very first trade, and that was a loser. And we lost 499.84 sterling pounds. Out of a starting capital. The starting deposit was £10,000. Remember, this is all a dummy account. So, and the aim of our trade is to use 5% of whatever our starting capital is, to take a trade. So on that very first trade, we took 5% of that starting capital, is roughly 5,000. And the trade setup was such that the risk was 499.84. And that was a losing trade, and that is recorded here, minus 499.84, and our spreadsheet automatically calculates what's left of our balance. Expected balance in the account on this line is 50.2 whatever. So roughly 9,500 sterling is our starting capital for this next trade. So back to the chart itself. So what have we got here? We have a trade set up for following the non-farm news of 2nd of June, which was yesterday, Friday, 2nd of June. Today is Saturday, the 3rd of June, 2023. And I'm certain it's comfortable, warm place of mind, looking at the chart, after the markets have closed and I've been able to analyze and deduce that we have a trading opportunity in this particular zone here. If I could expand that for a moment. So this is our trading zone, okay, and the parameters are all being shown here. So if I could go one step at a time to show you, the entry line is this one here. So we're looking to sell. So we're looking for the market is currently here. This is where market closed on Friday yesterday. So we're looking for that to track up there at some stage next week when market opens again on Sunday evening, 11 p.m. UK time. And we're expecting market at some stage after that's open. We expect the market to track up there into our sell zone and hopefully come down to our profit line, which is this yellow line, the target zone. If it doesn't, like I said, the third option is for market to keep tracking northwards to hit the stop line at the red line there. And that's what we are expecting. We hope will happen. And the entry zone, like I said, is at 1.2533, and the total risk in terms of points is 23 points. And our reward, if it goes well for us, will be 34 points. And the good till date is the 16th of June. So if by the 16th of June we don't get any trigger, the others are not triggered, we are looking to take the orders off. The red line is a stop line, like I said. If market comes up that way and continues up that way, we will be stopped out for another loss. However, if it comes down, we want it to come down to the yellow line being the target line for us at 1.2499. And we have the summary up here on the left hand corner here. Starting deposit, that's it. The zone itself is 17 points, and the entry point is 1.2533. That's the risk, that's the target. And the risk per point, we worked it out to be 20.65. My second video explains how we arrive at that. And our total risk in terms of a sterling will be 475. That is, if the trade goes against us, we will be losing 475 sterling. However, if the trade goes in our favor for 34 points, that equates to a 702.1 sterling. And the risk to reward ratio is therefore 1 to 1.147. I hope I'm correct with that. Otherwise, I'll correct that, but usually it's around 1.5, 1.4 from trades that I normally take. That is the setup essentially. And all we have to do now is wait for a trade in the market to open, like I said, on Sunday evening UK time at 11 p.m. And we will see what happens then. That's about it. Until then, ladies and gentlemen, I will see you again to update you on what happens with the outcome of a trade, whether we have another loss, or whether some profit, or whether we are going to be taking the orders off. We will update you at the appropriate time. Have a fantastic rest of the weekend. And from me, Dr. Simplicity, it's bye for now. Thanks for watching. And don't forget to click the like button and subscribe to the channel if you liked what you've seen. Bye.